Good evening, good evening, good evening. This is BYOB Market Talks, BYOB Market Talks. As you are logging in this evening, drop it in the chat, drop it in the chat. Let me know where you are calling in from. Drop it in the chat. Let me know where you are calling in from. Let's see here. And keep dropping it in the chat. Keep dropping it in the chat. I see Jacksonville as well. Keep dropping it in the chat. BYOB worldwide. BYOB worldwide. So just keep dropping it in the chat. Let me know where you're calling in from. Now, ladies and gentlemen, I notice it's BYOB Market Talks. BYOB Market Talks. But you also want to make sure, right? We want to make sure we're walking in those affirmations, okay? We are walking in those affirmations. So one of the things, what are those affirmations? Those affirmations are, I am a master trader. I am the signal. All my trades end in profit. I am 777. So we have to affirm those things, right? We have to affirm those things. And I definitely see a few new ones that you add to it. Like I saw, I am divine. I do not operate in fear of loss. I'm a BYOB wealthy woman. You know, you want to walk in those things in Jesus' name, right? You got to walk in that. Now, I did what I promised. I dropped that I am 777 in the Telegram chat as I promised. Who wouldn't watch it, right? I did what I promised to do. So if you wouldn't watch that, you know, let me get a 555 in the chat. Now, actually, let me get a 777 because it's I am 777. So let me get a 777 in the chat. Now you understand why that's our affirmation, why we added that to our affirmations. I am 777. I am 777. Okay? It is so important to walk in that energy. It is so important to walk in that. And that's why that's a part of our affirmations. So your mindset. It is so important. So now I also dropped last week's training in there. So if you did not get an opportunity to see it, because that's going to kind of really help you understand where we're going tonight, okay? That's really going to help you understand what we're talking about. We talked about the different types and the different styles of trading, and that's really going to help you with what we're talking about. That's really going to help you. So if you are new to the call, and you are new to BYOB Market Talks, right? You're new to the call and you're new to Market Talks. Let me get a 111. Let me get a 111 in the chat. You're new to Market Talks. This your first time on here with us. Oh, welcome everybody. Welcome. If you are new to Market Talks, and if it's not, you're still learning how to cash out, let me get a 222. So welcome and welcome back. So let me help you understand. Be your own bank, BYOB. This is the largest economic empowerment movement. It is the largest economic empowerment movement. It is a movement and it is an experience. And it is the largest economic empowerment movement in the history of mankind. And we are excited to have you here with us this evening. We are excited to have you here with us on BYOB Market Talks. We are excited, okay? This is about freeing you financially, educating, impacting 1 million families. So now let's get started. Let's go ahead and dive into this tonight. So what we're gonna do, we're actually gonna get started with what the BYOB cash out is. I definitely want everybody to understand what the strategy is. So we're gonna talk about that first. So we're gonna definitely start here, make sure we're on the right time frame. We're gonna start here on this 15-minute time frame, okay? Now, how do we do that? Well, it uses 3 indicators, okay? Uses 3 indicators. And I want everybody to understand that from a scalping perspective, okay? Because if I'm on these low time frames, I'm scalping. When I'm scalping, I want volatility. When I'm scalping, I want movement, okay? That's definitely what I want. I want scalping, I want movement, okay? That's definitely, well, I want scalping, I want volatility, and I want movement. And so the reason why I wanted you all to watch that training from last week is because these are conditions, you know, I want you all to, the market has conditions that has been changing. And we're here to empower you, right? We're here to help you understand the market. We are here to make sure you guys understand exactly what you're doing and what moves the market and how the market moves and how it flows. And I want you to be able to understand the market from every perspective. I want you to be able to understand the market from, you know, each perspective. And so I've gotten quite a few questions on confluence. And so we're gonna kind of highlight that. And I think what has happened is when we started the market talks, the market, I mean, we had a lot, the market, you know, the volatility is still there, okay? It is. The volatility is still there. The market is still moving. But what I believe, what I'm seeing is you guys memorize the strategy, right? So absolutely, it is being recorded. So you guys memorize the strategy. You memorize the strategy and you're like blue line cross over the red candle, flat top, PSR flip. And we're gonna go over the strategy in just a moment. But what happened is 2020 happened, right? And everybody's saying, oh my goodness, 2020. Oh my goodness, 2020. Oh my goodness, 2020. Oh my goodness, 2020, right? So many different things. But the market still moves. And when you understand the market, that's how we stay in profit. So you don't want to just try to memorize it, because when you do, when you start having to look at it from a different perspective, or you start looking at the confluence, then you're looking at it and we're trying to figure out, or you're trying to look at it and it's like, okay, now then you get the terms, and I'm gonna say it because it's the wrong energy, but I'm gonna say it because that's what you guys are saying. You're saying, oh, I'm confused. Well, first, I don't ever want to hear that again, because there is no such thing as being confused. It's such a thing as clarity. It's such a thing as, okay, stop trying to memorize it, because you'll say, well, I know the strategy. So no, I don't want you trying to memorize the strategy. I want you understanding the strategy. I want you understanding the market. And when you understand the market, when you understand how to use the tools, you know, when you understand those things, then you actually get that flow. You actually, you know, you actually get that movement. You actually stay in profit. And this is where we want to keep you. And so where we'll start is right here. The strategy literally is real simple. I got the blue line cross over the red in a downward momentum. And then you begin looking for that red candle with a flat top and that PSR flip. So what is the BYOB cash out? First it begins with a stochastic, okay? I'm gonna begin with my stochastic. And my stochastic right here, you see it runs from 0 to 100, and I'm focused on this shaded area. Now this shaded area, it literally runs from 20 to 80. Now this is where this crossover and cross down begins. So I'm gonna put this vertical line right here, because this is where this crossover and cross down actually begins on this time frame, right? You're looking at this crossover and cross down. That blue line has to cross over and cross down on this stochastic. Now you notice when that happens, look where we're at, right? You notice when it happens, this is where it begins, right? So I still have, like, each one of these candles is 15 minutes. So you notice that this is a leading indicator. These are lagging indicators. You still got nothing but space, time, and opportunity, where it still can take a while before you get to these other two candles, okay? So you notice that when we actually get to these other two candles right here, you're looking, I got this red candle with a flat top and I got this PSR flip, okay? So right here, when that actually happens, because you need that no wick on the top of this candle, this one actually has a wick, okay? This one literally has a wick at the top, right? It has that wick at the top. So I got a red candle with a flat top and I have a PSR that flipped to the top. So when I see that, that's literally the BYOB cash out. And another question that we get is look at the yes, 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 yes. My stochastic. My stochastic is a momentum indicator. It's not gonna stay at the top. If it stays at the top, like if it stays at the top, like, okay, that's at the top of a buy. But that means that something else is going on. So if I was looking for it to sell, like if it's at the top and it stays at the top, that means it's not selling. You see how this one stays at the top? That means it's not selling. So I need for it to move with me. So like this one is actually moving. You want the momentum, you want it moving, you want it going, right? I need it to go. And so now this is where my confluence begins to come in, okay? This is where my confluence begins to come in. So I'm on a 15-minute chart. So for my confluence, let me see here. All right, if I'm on a 15-minute chart, okay, that means each candle is 15 minutes. I'm gonna drop down to my 5-minute. So that's my drop down. And then I'm gonna go up to my 1 hour. Okay, I'm gonna go up to my 1 hour. So I have to drop down to my 5-minute and I go up to my 1 hour. Okay, that's where I want my confluence. Okay, so you want to understand that. So that's where I'm gonna want my confluence. Okay, that's what I'm gonna be doing. That's what I'm gonna be using for my confluence. So when I drop down to my 5-minute, okay, I'm gonna drop down to my 5-minute. My 5-minute needs to still be selling. That's the key right there. So so the lower time frame, my lower time frame, needs to still be selling. Hold on. Still, like in this example, like my lower time frame in this example is still selling. So it's still doing what it was doing. And my higher time frame, right? It needs to look like it's something I put on a watch list, okay? That's important. So that's the difference right there, okay? That's gonna be your difference. So this is what I'm looking at. And then when I come up to my hour, okay, when I come up to my hour, so it's not a trade that I'm taking right now. This is not a trade that I'm taking right now, okay? That's not a trade that I'm taking right now. So being that that's not a trade that I'm taking right now, then if it's not a trade that I'm taking right now, and that's what I'm explaining right now. If it's not a trade that I'm taking right now, it has to look like something that is, look like something I'm about to trade. So what does that mean? A trade that I would take means that it meets all the criteria, like right here. All the criteria is met right here, right? All my criteria is met right here. So meaning, and understand a watch list is never gonna be the same. The watch list is never gonna be the same, right? It's just not gonna be the same. So, you know, it's an art. This is where you understand art, not science. So this means blue line cross over the red and a downward momentum. I got a red candle with a flat top and I got a PSR flip, right? That has to be lined up. But right here, this was watch list, right? We knew we had a stochastic crossover. We were waiting on a trade to manifest. So we were looking. So, right, you go from the 15 and the 5, then the hour, correct. So I'm looking at the 15, I drop down to the 5. You know, even if you check the hour first, you still got to just make sure you check them all. It's just, I'm just creating, you want to check those habits. And then we go up to the hour. Right, watch list means it's not ready. It means I'm watching it to see. So like this one is not ready. So but I'm looking at it, you know, I got a red candle and it's a strong red candle, okay? I got a strong red candle. And then of course, as you're looking right there, yeah, it's not ready because of the wick. Now this one actually got a piece on the top because it's coming out of a correction. So it was selling, it's coming out of correction. It's gonna be different every single trade you take. Every single trade you take is going to be different. You don't know how it's going to align. And that's why I say it's an art. You don't know how it's going to align. You have absolutely no idea how it's going to align. Some of them you'll look at and you won't have a wick at the top. Some of them you look at, the stochastic will be at the top. Some of them you look at, you know, it might be a little bitty candle. It might be a doji candle. You have absolutely no idea what it's going to look like. They're all will be different. That's why you have to be able to look at this and tell. Like, you have to be able to look at this and say, okay, does this something that looks like something I would trade in a little while? So what does this look like? This looks like blue line crossover the red in the downward momentum. Looks like we got a little correction right there, and it's already going back down in the sell. So that's where it says, you know what? Look like something I would take for a sale. I can come back over here, and I know that I can give my pips to. I know that I can get my pips to the support line. That's what I know. I can get my pips to the support line. So if you are a 111, if you are a 111, then you know that you can do your 10 pips and cash out. If you understand support and resistance lines, you know you can at least get to that. So you will not at least, you know, you're not going any further than, we're not going any further than that first support line. So that's the strategy in itself. Now, and that's with the confluence. Now, understanding confluence a little bit, and we'll kind of look at this. So that's a confluence point. This is like a confluence point right here. So we got two of them right here. Now we're on the hour. Absolutely, exactly. It wasn't ready to trade on the hour, but it was okay for trading off the 15. So now what we've been trading and what we've been training on, and I've noticed that I'll come back and I'll say, hey, or when we're on the calls in the morning, we'll grab some trades from the harmonic scanner, from the bounce back, and even the swipe trades. So we'll grab those. And when we grab those, what we'll do is we'll bring them back to the vibrato.
Ms. Dyer.
Yes.
Before you move on, could you please explain the purpose of time frame confluence for the 1-1s to answer that question?
That's exactly what I was doing.
All right.
So that's exactly where I'm going with this. So now what we do is we'll pull those trades and we'll bring them back to the vibrato. Yeah, you don't take the trade until they're confluent. So you'll bring the trade back to here. Now, when you have so you'll bring the trade back to here. Now, when we're on here, we'll have the trade on a higher time frame, right? And a lot of those trades are actually called on the higher time frame. And one of the things that is important to remember is that the market actually moves, and the direction of the market happens on the higher time frames, okay? This is why this is important. The market moves on the higher time frames. Where the market is going happens on the higher time frames. And so when we drop down and we start scalping and we're working and operating on these lower time frames, you have no idea the direction of the market. You have absolutely no idea where you are in the market because you're on the lower time frames. And so what the confluence does and what it helps you identify is, one, where you are in the market is where you are in the market. For one, it helps you identify where you are in the market, right? It helps you identify where you are in the market. And it also, right, because you really want to understand where you are in the market. And it helps you understand if you are counter trend trading and trend trading. So sometimes, like, for example, The BYOB cash out was back tested before we do any time frame confluence, right? It was back tested with a 92% accuracy rate. But a few things that you have to take into consideration, okay? I'm gonna answer those questions in just 1 second. Let me finish explaining this. So don't focus on the chat right now. Let me finish explaining this and then I'll come back to the chat, because a lot of the questions are, you know, some of the things that people are saying, a lot of the questions you're thinking a question. What happens is you guys are thinking about questions or you're not listening to what I'm saying. And so then I'll come back to the chat. So let me explain this and let me explain the confluence and then we'll come back to the question. I might actually answer your question. So what typically will happen is this. So this was back tested, right? The lower time frames, you actually have absolutely no idea where you are in the market. Okay, you don't know. The higher time frames tell you where you are in the market. Now, when we back tested this strategy, okay, on the lower time frames, you still don't know where you are in the market, okay? Because the lower time frames, you're not gonna know. The higher time frames give you the trends and where you are. But like, let's say, for example, I can grab 10 pips in and out, 10 pips in and out, 10 pips in and out, right? I can grab 10 pips in and out. But what you do not know is, one, you got your personal pip reaction time. And you also have a broker spread in combination with that. You have both of those, okay? You got both of those. And so when you add up those, if I'm in a counter trend trade, I'm not gonna get my 10 pips, because we've seen that some of you all will actually take a trade and you might, some of you guys can get in a trade with your personal pip reaction time. And what is that? Like, let's say this is my stochastic. I got somebody, we know my trade is lined up right here, right? We know it's lined up. And then you turn around and I'm gonna use one of these lines right here. And like, let's say, you might not get in a trade till down here. Well, how many pips is that? That's already passed. You know, oh, wait, I'm on 15. That's 36 pips. It's not that many. You guys don't take that long to get in a trade. So that's 11 pips before you actually in a trade. So you've taken, by the time you see the trade, get in the trade, market execution of the trade, 11 pips have already passed. And then you got your broker fee on top of that. And then you still trying to get 10 pips on top of that. So that's why that's one of the reasons why the time frame confluence is important, because you want to know where you are in the market. You know, you want to make sure you get your pips, you know, so it really, really helps you with that. And that's that pip reaction time. So if you Google it, you're not going to find it unless you guys have talked about me enough, because I actually made that up. So when I say execute, that's market execution. When you hit market execution on your MetaTrader 4. So you're looking at the charts and then you still got to open your phone, find the currency pair, hit trade, and market execution. And I've seen anywhere from 11 pips, I've seen 20 pips, I've seen 15, I've seen 5, right? How long does it take you to get into that trade? So that's your pip reaction time. So that's that. And so then, like I say, the higher time frame actually tells you where you are in the market. So that's very important as well. You know what I'm saying? That's very, very, very important as well. So you really, really, really have to consider that. So all of these are factors of why time frame confluence is important. So my higher time frames, as you study trading, my higher time frames, and that's why we did that training last week, is to really help you understand where you are in the market, okay? It's to really, really help you understand. Because if you don't do your time frame confluence based on what I'm just sharing with you and what I'm showing you, you know, it's a possibility you might not get your 10 pips. And it's not that the 10 pips were not there. It's just the simple fact that your pip reaction time in a combination with your broker fee. So that's why that's important, even if I'm scalping, right? That's why that's so important, even if I'm scalping. So you want that confluence because it helps assure that you're gonna get those pips, right? It gives that assurance that you're gonna get that money. You're gonna get in and out the market with that. So hopefully that answered those questions. So let me go back Now, you want to use that factor of 4, 5, or 6, no matter what time frame you're trading on. So this is what you're looking at. Now, if this is what you're looking at, if I'm on a 15-minute chart, I'm looking at the hour. If I'm trading at 1 hour, then I'm gonna look at the 4 hour. I want confluence on a 4 hour. If I'm trading on the 15 minutes, my confluence is the hour. If I'm trading on the hour, my confluence is the 4 hour. And so that's where I kind of showed you how you know when to push through and how we know when to keep going. So right, exactly. And if you notice that you have a slow pip reaction time, then you kind of want to be with the trend. And so now if you have noticed that, then if you want to make sure you're with the trend, you can check the hour and the 4 hour. You know, you can make sure you're only trading with the trend. And so you can check the 4 hour as well. So, you know, if you have a slower pip reaction time, it's okay. We're here to help put you in profit. We're here to make sure you stay in profit. We're here to help you build that wealth. So just like this one would have been a really good, you know, so you can help identify those trends and identify those trades that actually have those trends. You know, when you notice that they gear up on the harmonic scanner, or you notice that they gear up off the bounce back, or when they get ready, then you know when you take your trades. Right? You know that you might not be a scalper. You know, you take these trades, and guess what? That's why last week's training was so important. It helps you identify your trading style, or when you need to be trading, how you get in and out of the market based on your needs, your personal needs. And this actually right here is one of those. And so if you notice that you do have a slower pip reaction time, and you need to be in a position where you grab more than 10 pips at a time or something like that, then guess what? Then you take trades like this. You make sure they're lined up on the hour, right? You make sure they're lined up on the hour. And when they're lined up on the hour, you get your confluence on the 4 hour. Make sure you got your confluence on the 4 hour. When it starts pulling up, you drop down to that 15 to make sure it's still buying. You understand which it is. You understand your support and resistance lines. Now, when you trade on a higher time frame, you can push through more support and resistance lines. And guess what? This one actually moved up. You know, you can actually take those longer trades. And I actually moved up for like 165. How far was that? Hold on. This one actually moved up. That actually went up over 200 pips. So over 200 pips. You just have to undertrade. When you understand how you should trade, and you understand your trading style, and you understand who you are as a trader, then you maximize your pip opportunity. You maximize your profit. And so that's why last week was important. And if you bring it back over here, and you actually get to maximize, you know, you actually get to maximize your trading style. You get to maximize your opportunities. If you got a question, drop it in the chat. Drop it in the chat. So you want to, so going back to this one, the stochastic need to be crossed over, look like a cell. Yes. Now the one that has to be a cell, so let's go back. And the one that has to be lined up is on the 15-minute. The only the time frame that you are trading on, only the time frame that you are trading on is the one that, only the time frame you are trading on is the one that has to be lined up with the blue line cross over the red, you know, red candle flat top piece or flip. And of course the one below it, you know, because that one happens first, right? The higher one has to look like it's about to happen. The higher one looks like it's about to happen. And so before I show you the confluence first, any questions, comments, or testimonies, drop it in the chat. If you want to see confluence on a higher time frame, you want to see, like, you mean, so if it's a buy from here. Oh, awesome, that cleared it up. So you're saying if I want to see a buy, then you want to see a green candle. Absolutely. So if I'm looking for a buy, no, just like it's about to happen. If I'm looking at the market, if I'm looking at it, is it about to happen? Think about it. this is what, just like think about it. It's about to happen. Like, does the candles look like they're about to form? So like this one, I actually have a green candle. So I'm gonna do the buy because we got a question on the buy. So I'm gonna do the buy. Let's start down here with this one. So we got a green candle, and this one actually was more than 200 pips because it started down here. So look, we got a green, oh no, that's the hour. So the 15 minutes started down here. We got a green candle we got the blue line cross over the red for the stochastic. We got a green candle. Now look at this. I got a green candle with a flat top that starts here with a PSAR. So this is where, so the question was about a buy. So this is where the buy got ready. But the other question was about to happen. This one, look at how this candle is green. This one is green, right? So this one is green, right? But that green candle doesn't have a flat bottom or a PSAR. The PSAR is up here on that one. So that's what about to happen means. You can see that one looks like, okay, we'll wait. I'm waiting on, so when you say, oh, I'm waiting on a trade, like when you guys in the morning, you drop it in the chat and you're like, oh, AUDJPY look like it's setting up. It's about to happen. So this is what about to happen means. So about to happen on the 15 is no different than about to happen on the hour. It's about to happen. So this is what a buy would look like, the exact same thing. But this is what about to happen would look like. So this would be confluence, right? Great. So got one question answered. So this is what that about to happen would look like. So if I'm on an hour, it's a setup. So if you see a setup on the 15, when I go to the hour, this is the same type, it's the same thing. So you guys see it on the 15. When I jump to the hour, it's no different. This is what I mean about, and so I don't know who's asking a question, or you know what's your skill set, or if you're a 111, a 222, or a 333. But what I do know is I get it a lot. So this is what I mean about, I don't want you guys to, you know, where you memorize it to understanding, because a lot of you all get it right here, you understand it right here, but when I take it up here to the 1 hour, right, I come up here to the 1 hour, and then you're like, wait, what happened? What do you mean on the hour? What do you mean it's about to happen? The exact same thing I meant on the 15. It means the exact same thing on the hour and the 15. It means absolutely nothing different. Right? That meant absolutely nothing different. So if I see it's about to happen, right? If I say it looks like something you put on your watch list, if it looks like a trade that we're waiting to set up, so that's what that means. I got a light bulb. So that's what that means. Are you saying if we're looking to enter a trade, for example? No. If it's not about how many minutes are left on the candle to close. No, these are Hikinashi candles, okay? These are Hikinashi candles. These are Hikinashi candles, okay? Everything that you learned about Japanese candles are completely different. So let me show you. These are what Japanese candles are. So Japanese candles are actually real-time candles, right? These are real-time candles. So a lot of these are what you use with price action. They're what you use with everything else. So these, right? So what the Hikinashi candles do is they are trend candles. And because they are trend candles, they read these Japanese candles, and you know, they got some mathematical calculations involved in them. And so they actually interpret. So where you have to, if you know, on the YouTube channel, it's actually about 2 or 3 classes. You know, it took about 2 or 3 days where we went through, and it's got understanding and reading the Japanese candles, and I've gone through and taught about how to read the Japanese candles, and you know, and so you have to go in and try to figure out, right? Go ahead and drop your question in the chat, and just drop it in the chat. And I promise I'll get to it. And we go through and we try to understand these Japanese candles, and read them, you know, and understanding the movement. And so you often you enter on the second or third candle, and that's how you read Japanese candles. But what Hikanashi candles do is they actually interpret, they translate. So they're trend candles. So they take all of that away from you. So with Hikanashi candles, if you look at them, right, these are nice little trend candles. So if I wanted to take a trend line, okay, if I wanted to take a trend line, you can just kind of see how these run up nice along these trend candles, okay? These are nice trend candles. So they actually do all of that. Just look at these candles and nice little trend candles. So look at where they change, look at where they curve, look at how they do. So I got impulse, correction, continuation, and then of course this one is on a support line. So these are nice trend candles. And so this is why it's real nice. I got a candle with a flat bottom, and then when that PSR flips, which is that reversal in the market, which is that trailing stop loss that runs with it, we know that the momentum has shifted in the market, and I can go with that candle. And you can kind of see how it goes, right? That's what that does. And so you need all three of them together. And that's what you're gonna get. And I wanna walk you guys back up to here. Not the 4 hour, it depends on what time frame you're trading on. If you're trading on the hour, so yeah, the 4 hour is the trend of the market. So there's a go to a trailing stop. There is trading the BYOB cash out. There is becoming the signal. Trailing stop loss is on that video. You're gonna have to go watch that video for the trailing stop loss. But this is a trailing stop loss. The PSR is a trailing stop loss. But if you're trying to do an actual trailing stop loss, you're gonna have to watch that video. But this is a trailing stop loss. This is a trailing, you look this, the stop loss actually goes above the PSR. Your stop loss goes below the PSR. You notice that the PSR does not flip until momentum shifts in the market. You always want to keep the stop loss outside of the PSR. Your stop loss is always outside of the PSR. Becoming a signal. It's becoming a signal. You're welcome. Now, this is what I want to make sure we get to. So here I am on the hour, okay? And I'm looking at the confluence first. I'm right here on the hour, and I'm looking at the confluence first. So this is when that confluence shifted. So now I can pull a trade, which we pulled some trades in the morning. We did get some trades off the harmonic scanner. For the sake of time, I'm just going to use this one. You know, we got some off the harmonic scanner. And so when you actually go pull those trades based on your trading style, you will have many different ways that you can take a trade. So we pull some trades from the harmonic scanner. And then of course, when you go to last week's training and you understand your trading style, i.e. if I'm a scalper, understanding that they, you know, how the market was moving, like this morning, it wasn't moving because we knew we had that, you know, the Fed chair, you know, he had to testify with Congress, and that took a while today. And then I saw the 777s in the chat after that, right? We saw so many 777s in the chat because you guys understood how to take the trades after that, right? And you cashed out. And so as you can see, what'll happen is when it starts getting that turnaround, or even after this, right? This is your confluence. So you can kind of see where you got that stochastic, right? Because that's what you would actually be seeing right there. You got that stochastic right there. You got that stochastic and that candle that's actually happening right there. You actually have that right there. And so because I know it's not ready on the hour, and I'm okay, I'm a scalper. So I'm gonna jump down to my 15, right? And I'm gonna jump down to my 15, and I can say, okay, where was it ready? Right there. Okay, I got it right there. So I'm gonna jump down to my 15, and I'm gonna say, okay, this one was ready to take a trade on the 15. This one was not. It wasn't ready yet. But do I have a blue line cross over the red? I got a red candle with a flat top, but I had to still wait on the PSR. That one wasn't ready. Just when I had the blue line cross over the red and the downward momentum, I actually got a red candle with a flat top, and I got a PSR flip. So I knew I could have took this trade to that support line. I definitely could have took that trade to that. This one ultimately, oh wow, 70 pips. You know, that's what it gave me. And this one right here, you know, wait until this one got to right there when it was ready. If I would have went to this support line, you know, to this one right here, this one would have given me like, right, because it's actually right there, that's like 60 pips. So you know you can get your 10 pips and cash out, but if you actually go to the support line, you can get a little bit more. I get a few more pips to the support line. So the trade was actually called on the hour, but it wasn't ready yet. And then when it gets ready, then you take it on the hour. But in the meantime, in between time, you actually had a scalp. So it just kind of shows you the multiple trade opportunities that you actually have. So some of you guys don't want to trade on the hour. Some of you guys want to just scalp and take it on the lower time frame. So that's how you do it. I can scan the market for my confluence first. You know, looking at my confluence first, drop down, make sure everything lines up on my 15. Of course, I still check my 5. I still check my 5 because that's part of how I identify my trades. You must check all 3 time frames and you go from there. Questions, comments, testimonies. I know you have some. Questions, comments, testimonies. So everybody, 555 in the chat. 555 in the chat. Drop your questions in the chat. Questions in the chat. 555 in the chat. If you are trading on the 15, you must check. Yes, if you're trading on the 15, you must check the hour. If you are trading on the 15, you must check the hour. So, okay, so one time frame feeds into the other, but you go back to check because the movement you'll see first. So are you trying to ask why I checked when I checked the hour, like that was called on the hour, and I'll drop down to the 15? So like it wasn't ready on there. So if I know that I'm gonna check the hour for confluence, then if I know I got a trade that's not ready on the hour yet, remember you can drop down. So if I know my trade not ready up here yet, I can drop down and trade on the lower time frame. So I can drop down and trade on the lower time frame. Yes, I can drop down and trade on the lower time frame. But you make sure everything is lined up on the 15. So you can do that. So it's your Pip reaction time. So do I need to explain that again? Are you good on that? 555? You understand it? The Pip reaction time? Okay, good. You got it? Great. And that's another reason why. So somebody asked about the 5 minute. So that's a why, because I've seen, you know, that's, you know, okay, so so that was a good topic for tonight, that Pip reaction time. So that's the reason why I don't ever do any trades off the 1 minute, right? Even though scalping, you know, I've seen some of you guys like want to scalp the 1 minute. I'm all about putting you in a position to win. So the question was a 5 minute. So if you're trading on a 5 minute, this is what I want you to understand. Okay, if you're trading on a 5 minute, this is what I want you to understand. On that 5 minute, okay, this is what I want you to understand. You get more candles. And the higher time frames, like for example, if, you know, just kind of let me point this out. On the higher time frame, on the daily, I got 1 candle per day, right? On the daily, I got 1 candle, okay? 1 candle. So as I break this down, you got more candles. But the 4 hour is still, that's one candle every 4 hours, right? One candle every 4 hours. So if I go down to the 5 minute, you have a lot more movement. So that means that I got a candle every 5 minutes. So there's going to be a lot of movement. I'm going to get a lot of candles, right? And so you're going to get a lot of movement. So you already understand that this is all the movement that's transpiring within this. So can I trade it? Absolutely. But what I really want you to understand is how important the confluence is on these lower time frames, okay? So if I look right here, if I drop down to the right, it needs to still be selling. My factor of 4, 5, or 6 is my 30 minute, right? So I definitely need, oh, I should have changed that color. I definitely, which one is it? All right, so go to the 30 minute. See, I was looking at the wrong one. We definitely want to make sure that this is definitely selling, you know. So this is definitely, so this is definitely where you do that. So testimonial, the trade on the GBP NZD this morning on the 4 a.m. session was a magical example of the BYOB cash out. You called it, Ms. Dyer, and I had doubts, but you're the trade whisper, and it went past my profit level. I am divine, so I am the signal. I'm a master trader on my trades in a profit 777. I love it, love it, love it, love it. So thank you so much. Thank you, thank you, thank you, thank you, thank you. Thank you, thank you, thank you. And excellent, excellent explanations. You got to learn the terminology. You get the concept. Excellent, 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 excellent. So yeah, just message me. So, and then of course you've identified you're a scalper. Yeah, if you are a scalper, you want to be in and out. So you're definitely on the lower time frames. So you definitely want to go back to the training from last week. If you need to verify, you know, kind of understand and that volatility, you definitely have to make sure that the market is moving. You really, really, really want to make sure that the market is moving. So you got to make sure that the market is moving. So yeah, go back from that. So okay, so if you're on a 5 minute, yes, no, it's the 30 minute. It's not the 15, it's the 30. It's the 30. So if it's the 30, factor of 4, 5, or 6. If you could just think factor of 4, 5, or 6. So whatever time frame you're trading on, just remember factor of 4, 5, or 6. So you're gonna be on the 30 minute. So that's like what we're looking at right here. So that's, somebody said the 5 minute. So right here, and that helps so much about the candles per time element. Oh, awesome. So right here, right, you got so much more. And then, so even if I wanted to look at this buy, you know, even from this one, like this perspective, so that one shouldn't even, this one hopefully didn't even line up. So if I look at this, I go to the 30, right? I never had confluence. I never had confluence. I never had confluence. I never had confluence. So this is what I mean. So you would have been looking at this trade because you would have known how it played out. And you guys would have been like, blue line cross over the red. Green candle with a flat bottom, PSR flip to the bottom, right? You'd be like, I grab my 5 pips and cash out because I'm on a 5 minute chart. Or I can go to that next, you know, I can go to the next support or resistance line, right? I can get my pips and cash out. And guess what? No, 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 no. You're gonna get more. Like, look at how much this moves, up and down, up and down. Look at how much movement you get on a 5 minute chart. That's why you never see me start teaching from here. You're never going to catch me teaching from this time frame because of how much movement it gets. Can you trade from it? Absolutely. Am I going to teach from it? Absolutely not. Right? It's not going to happen because of how much movement it gets. So, but yes, you can trade from it. I'm never going to tell you can't but I got to be able to do my time frame confluence. I got to be able to drop down. Okay. If I'm dropping down, is it in a buy still? Look, it's not even in a buy. It's in a pullback right there when I needed to be in a buy. I go up to my 30-minute. Look what my 30-minute is. It's in all this is red. So I would not take that buy. No, 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 no. And look what happened. You know, it didn't even make it up there. So you would have got stopped out, you know, or it would have definitely pulled back on you. So you wouldn't have got stopped out as a yet. You got close, but it's because it's still in play. But you look where you are right now. So you be sitting there mad at yourself or mad at somebody, you know, hopefully not me, but you know, you be sitting upset because the trade didn't play out. And based on your pip reaction time, you know, because how many pips is this? Because I'm gonna tell you about your pip reaction time once again. So, you know, so that's for your confluence. So whatever time frame you're on, so when it went up about a few pips, so you guys literally would have been, you guys would be entering the trade up here somewhere. You'd have been entering the trade up there somewhere. And then you'd be sitting there trying to with a take profit way up here. So, you know, that's what it would have been. So a factor, so now, so that's what that is. So, and I want to make sure that you're doing that. So, and once again, okay, once again, so oops, I do not try, that's not what I'm trying to do. I don't want to change this. All right, so do I ever look at, yes, I pay attention to reversal patterns. We just haven't done a training on that yet. We just haven't done a training on that yet. So we just haven't done the training on that as of yet, but it is coming. It is definitely coming. So, and even so, factor 4, 5, or 6. Once again, the time frame that you're on, you multiply that by 4, 5, or 6, and that is definitely the time frame that you want to check your pip reaction time. I mean, I'm still talking about pip reaction time. That's where you check your confluence. So if your pip reaction time is slow, should you wait? No, pip reaction time has absolutely nothing to do with confluence. Pip reaction time has nothing to do with confluence. Your pip reaction time is the only thing that pip reaction time is how long it takes you to get in the market. So I got about 2 or 3 minutes before I have to transition. So let me run through this one more time as far as pip reaction time. You know, all right, so now let me talk this. So pip reaction time, okay? This when my trade activated. You got some of you guys, right? Let's just say how long it take you. This that first candle that we on. So sometimes it takes you guys get about, like, let's say right here to get in a trade, right? Some of you guys, I've seen some of you guys take about this long to get into the trade, okay? You know, let's see how many pips is this. This one is 7, 8 pips. This might be about average. This one is about 15. I've seen this, okay? So what I was saying is this is why time frame, this is not the only reason. This is a reason why time frame confluence is important, okay? Not the only reason, but it is a reason why time frame confluence is important. So now you think about it. So I've gone about 15 pips before I actually got into the trade. So now, but I'm still looking for 10. So before I could even get in the trade, so it took me that long to get in the trade. Now I still need 10 pips to take profit. Okay, so I'm not even taking profit till I'm somewhere down here. So let me make sure I did that right. 10 pips from there. Yep, 10 pips. So now I'm gonna make this one yellow So now my take profit is down here. So based on your Pip reaction time, I'm gonna just give you the ladder. So based on your Pip reaction time, and that's just how long it takes you to get into the trade, you know, hopefully your broker fee is in here too. We're just gonna assume your broker fee is in there as well. So this is how long it takes you to get into the trade. So this is actually gone. It went. That's 24 pips. Now when we're training or when we're talking and when we're going through this, we're like, oh, that's 24, almost 25 pips. Ooh, that's a great trade. But in reality, that's not 25 pips. Because it took you how long? How long did it
And
take?
we're supporting.
Hold on. I need you guys
so
to stay muted. I need you guys to stay muted. I really need you to stay muted. Thank you. So in reality, right? In reality, we're like, oh, that was 25 pips. In reality, you know, how long did it take you? Right? How long did it take you? So this is so important, right? Do we wait on the candle to close on the time frame we are trade? No, once again, these are Hikanashi candles. Once again, these are Hikanashi candles, right? These are Hikanashi candles. Once again, these are Hikanashi candles, okay? They're not Japanese candles. So when you're dealing with Hikanashi candles, they translate, right? They translate. And so when you're in the academy, right? When you are actually in the academy, then all your training and everything is done with the Japanese candles. So I know where that question comes from. So this is why if you look on our YouTube channel, there is a getting started video. And that getting started video is gonna guide you to the academy first, because you have to go through the academy and understand the basics. I mean, that is hands down, you have to understand it. You gotta go through that. You know, you really have to understand the importance of, right? The academy, hands down, is a great academy. You really have to understand that. And so the way it's set up is you'll go through the academy, you will go through the basics of what's in the academy. And I'm explaining to you how it's set up. You go through the basics of the academy and you'll get through there. You have to understand it hands down. No matter what you do and no matter in life, you know, you gotta be educated. There's no such thing as skipping steps, because what we're doing, and we just talked about this movement and how impactful and important it was. It is in the lives that are literally being changed. And so you don't want to skip steps, because we're talking about your future. You know, we're talking about your livelihood. We're talking about your wealth. So you have to go through that academy. And then what happens when you get around the 100 and 200 series, once you complete those, it's going to direct you to the YouTube channel. And it's done like that for a reason. And, you know, like I said, in the academy, it talks about Japanese candles. It kind of give you that foundation. Goes to the YouTube channel where you start understanding the BYOB Cashout. But then you got to go back to the academy and make sure you get your 300 and 400 series. Because when you get to the YouTube channel, you are actually going to begin to be able to trade and understand the BYOB Cashout. And that's because I did create this strategy, but I also use Hikanashi candles. But also think about it. You've gone through training. Now you got some application. You begin trading. And when you combine them two together, now it begins explosive, and you can actually start putting yourself in profit. You know, you got your education and your application happening at the same time, and now you're empowered, right? So don't skip the video. You want to make sure you watch the getting started video, right? That's very, very important. So you can understand how to do it. Then you kind of come back and you finish the rest of the training in the academy. And that's going to elevate you, right? Because it's going to talk about the harmonics. When we're using a harmonic scanner, it's going to help you see those things, right? It's going to help you understand why we're doing those things. So you're always a student. You always want to be in education mode. You always want to be in a mindset of where you're expanding your mind. where you're trying to take it to the next level, and that's going to keep you open to where your understanding is. It should be nothing untapped in that academy. It should be absolutely nothing untapped in there. So Mr. Rogers, can you drop the link? I got somebody asking for the link. And I'll drop the getting started video specifically in the Telegram too. I can drop that specifically in there, but if you can drop the YouTube channel, make sure you guys are subscribed as well. You definitely want to be subscribed. And this is where these videos will go. Thank you so much. So thank you. So the strategy is the BYOB cash out. Everything I do is BYOB cash out. Everything I do is BYOB cash out. So, all right. Now, with that being said, ladies and gentlemen, I am over my time. I'm over my time, but I'm excited because you guys are cashing out. Cashing out. So excited. Do not